Park, really, nothing's changed there. It's phase 4 or is it phase 5? Which one's about to be done? Emerald Ridge are still building in there. Shallow Creek, same thing, nothing's really changed. Coslin hasn't changed much, but that next phase should be coming up on the next meeting, right? Okay. And that's phase 4? 3. Aberdeen, they have started construction in Aberdeen. So that's going to be going here. Timberline, not much has changed since the last meeting. They're here to talk about the bonds. That's why y'all here early. So that has to do with Timberline. Waterford, waiting on master plan approval. There's some work being done on that. So hopefully we'll have something to bring soon. Dunsmore, nothing's really changed on that either. Airport convenience store is open.
Hallelujah.
Finally. And Crystals is open. And I saw on Facebook that they ran out of Crystals today. So, not a good early. Fast-paced medical, they're close to being done.
Yeah, I think I
They're
got their
getting
CO
close. Yeah.
Friday.
Did they get a CO?
I think so.
Okay, there you go. And Comfort Inn, plans have come in for that, and
They've been resubmitted.
they're being resubmitted. So that's moving along. Seth Gardens, I hadn't heard anything.
They got their permit.
They did buy the permit? Okay, so there you go. Mavis Tire, shouldn't be too much longer.
Close to them too.
Yeah. Homes of Sweet, they're working. Yeah, they're working up there. That's the one going beside Hampton Inn. And the Comfort Inn is the one going by Saturday. Kings Crossing, I haven't heard anything from them, back from them. And TNT Fireworks, I'm sure y'all all seen the big brick building over by the airport. That's TNT Fireworks.
I have a question on that one.
Sure.
Okay, so I know that they came before council because we had so I guess council changed the requirements because we had weren't they trying to get council to change when fireworks could be shut off and all that, and I guess council changed it?
Not,
I think
they
it's
changed
sales.
when they could sell them.
Sales, yeah.
But they can sell them from a permanent building, right, Tony? All year? I think is what the change was, because it was from
Just the
little
4th of July,
little
New Year's.
pop-up
Yes.
things. They can only sell them during certain times, but in a permanent building, they can sell throughout the year.
Okay. What kind of signage can they have on the exterior part of their building?
Same thing everybody else has.
Okay.
I mean, if they've got a front that they consider their front is fronting 65.
Yeah.
So they have a little bit more signage on the front than they do on the.
But it can't be like banners. It has to be like an actual,
Yeah, it's an actual sign attached to the building.
and it's like a certain length and width and all that stuff. Okay.
I mean, it was 240 square foot total that they could have.
Okay. Can you put that last slide back up?
Yes, sir.
Now, when you,
The one before this one. The very last one. No, go back. Go ahead.
The commercial one?
Yeah.
When they get there.
do you have an idea of open date for them?
They warmed it up
They're shooting
before.
for 4th of July.
Okay. And for Waterford, you said approval. Do you mean council approval?
Yes. Well, the master plan of work, yeah.
Yeah.
With them.
What was the other?
Dunsmore is the one they approved, but the council didn't.
Right.
Waterford hasn't been to them.
Oh, yes, she's right.
Waterford hasn't been to the council?
to the
Y'all
commission.
didn't pass it.
Yeah, y'all didn't pass him. He came, I don't think you were here.
Okay, I was looking at the minutes. It says Waterford North Master Plan Approval. It just says the votes were as follows. There were 5 yeas, so.
They voted to table it, not to,
Not to vote on it.
yeah, not to vote on it.
Oh, the table. I'm sorry, I missed that. Thank you.
That's it for me. Yeah, he just wants to see that. You good?
All right, who's going to talk about the bond?
Insight.
Dale Clayton, I was here last month, we discussed the bonds. We mentioned the possibility of having an additional work session tonight. I didn't know until last week, but Tammy called and said y'all wanted it to be back on the minutes, so we didn't know if y'all had questions, discussed it openly, anything. So we're here to answer anything. I think there's Tammy, is there a different package or something? that
It's
was
in their
put
package on what other municipalities require.
Yeah, so we provided a list of all the surrounding municipalities on what their bonds are, what their requirements were on their percentages based off of seal coat or whatever. So just trying to see if there is any option to put into the, to do bonds, insurance bonds instead of the CDs. Like I said last time, it's a very big strain on a business operating, having to go put. We have 2 on the next agenda, and time we get through, we're going to have a total of $1 million in cash in total CDs, and that strains business. There's not very many businesses that are operating around that have $1 million that they can just sit out there for 2-3 years while another part of the business is being taken care of. So I don't know if there's any questions or what.
Anybody have any questions?
How long have we been cash surety instead of bonds? Have we always done that? Because we used to do bonds, right?
Correct.
How long ago?
Last 2 years, about 3 years,
Yeah, maybe 2.
2 to 3
Maybe
years
2.
when we've been required to do that.
Okay. What was the reason why we swapped to cash instead of bonds? I'm sorry, I'm a little naive in that, so just, do you remember why we swapped to cash surety?
I'm not sure, so I don't want to say.
Was it the PC that made that decision? Or was it council?
It was made in the subdivision regulations when we changed the subdivision regulations. That change was made to go from bond to cash.
But I think that was because we had some issues with bonds, and that's why we went to cash.
My guess is probably that pre-2005 when the market crashed, back when seal coat was $3 a square yard, and now it's 7 to 11 depending on where it is. My guess is that like every other municipality, there was a time when bonds weren't tended to, and they may have gotten away from them at that point. That's probably my assumption, Wayne. I don't know that I've ever asked the question of Wayne. I would bet that's it. I mean, a lot of these folks that you see in the list have revamped their bond processes as far as what they do and what they look at, and they're requiring. Some of these used to be 110%. Now they're up to 150. You know, they're up to different places. And I don't know if you've ever looked at exactly how you guys calculate yours. So let me just run through it with you. On an asphalt wearing surface, which is what we all refer to as seal coat, you take the square yardage times the cost of the square yard, and then you multiply that by 1.75, basically 175%. On the binder and base course, which is the gravel and the pavement that goes over the gravel that's usually left there during construction, You take the total square yards of it times the cost, and then you do a 20% factor of that, then you multiply it by 1.75. So 175% of that for the surety factor. Curbing, total amount of footage, times the cost, times the factor 0.2, which is 20% of the curbing, and then you do 175% surety factor on that. So that's pretty substantial amount of cash alone. And then on the sidewalks, you do 100% of the sidewalk times 1.75% of the sidewalk, which is a bond two. Yeah, a bond two, it's either included in that bond or a second surety. Most of the sidewalks in the ones that you look at here are handled by the builders. They're not built ahead of time. If they were built ahead of time, they'd probably get broke during home construction. I think everybody would probably agree with that. But most of the time, if we're in a city that does do something with sidewalks, they have the builder come in. When the builder comes in, they post a $1,000 bond when they get their permit to make sure the sidewalk's in correctly whenever they get finished for their CO. But if you look across the board at all these, and I worked on pulling the bulk majority of these, so did some of our staff. The bulk majority of them are bonds or letter of credits, as you see at the bottom that I believe that's Pella. Yeah. They use a letter of credit or a bond, 200%. Bonding has changed a good bit since the market crashed. The bonds can be put on auto renewal. They have to be paid for by the developer, every so often to make sure that they are active and they're not released without your signature on them. So if you let me bond if you let me bond this floor in here, I couldn't just go release the bond. It would have to have your signature on it. So some things are different that used to not be that way in the bond world. I'm not an agent, so I can't get into the details of a lot of that, but I can tell you how they work and how we see them work. It's very similar to if you bid a big municipal job and you have a contractor bond it. He's bonding saying he's going to finish the job, so he's not putting cash up, he's putting a bond up, and he may be working on a $20 million project for you. So it's kind of the same thing, but the big thing that Mr. Clayton was saying, if you take Timberline 6 and just Coslin 3, that's over $1 million of cash money that could be reinvested back into your city as another development or whatever of that matter. You take a small, and we tried to run the math on this in the office on some of the smaller developers that we work for. You take a small developer that develops 30 to 50 lots a year with the extreme cost that's on things right now. They don't have that kind of money to put up in something, so you end up limiting them from being able to work in your city. And the people who have unlimited funds to do larger things in this nature are going to be people who are publicly traded in that kind of thing. So you're actually pulling in, if you will, larger tract builders and things like that. You're making, because they're the only ones that can fund to do this, to where, fortunately, we've been working on this project a long time, so we have money ahead of the game that's going into it or could go into it that somebody else wouldn't out of the very first development that they did. So that's somewhat of a kind of unintended consequence. I don't think it was intended by this, but it's something that I would just say maybe think about. Because I understand what you're probably doing it for, but I don't know that practically it applies with every situation, every developer. Across the board, it looks like a good idea. It is cash in the bank, but at the same time, if somebody had 100 acres, they might get 50 done, and if they don't have profit to keep running and keep moving, you could force them into the scenario where they can't. So then you've stunted the development that as a whole is in your city. So just some things to think about. But I was hoping this list might help you guys some, just see kind of what your surrounding neighbors and everything are doing as well.
What's the difference between a seal coat and a wearing surface and binder base?
So a seal coat and a wearing surface are the same thing. They're that top inch or inch and a half that goes on it. Everybody references them as something different. It's
A half
actually
inch, 1.5?
top inch to inch and a half.
Okay.
So everybody references as something different. It's actually a wearing surface. A seal coat is actually liquid that's applied, but that's what they mean if you read their regulations and it says seal coat. They're referencing a wearing surface. Those are actually two terms that get mixed up a lot.
Okay.
The base and binder are the asphalt, or the gravel that goes down first is the base. And then the 2.5 inches that go over it with larger aggregate in it that is asphalt is the binder layer. Thank you.
I have a question, maybe Tammy, you can help with this. You know, if a bond is issued to a developer and they came forth with an extension, a need an extension for another 6 months or something that fits the criteria of our regulations, and then they get another one, and they get another. Each time they do that, does the bond changes at all? Say if we go a year or 2 years?
See, I'm not
3
sure,
years?
Mr. Ernie, because I've never dealt with the bonds. Chris always did all that. Him and Amy or the girls here, I've never dealt with the bonds on it, so I'm not sure how they work.
So, just my understanding, okay? The reason that y'all added the 200% or 1.75% is to cover your cost overruns through the period. So, let's just say, base 6 at Timberline right there. Cost runs at a 1.75, you have to have a 6.5% year-over-year inflation for 4 years, which actually totals up to about 25 or 30%. We're nowhere close to that. So it's built in to cover for that wearing surface the potential for cost increase to go up. So just an example where James was mentioned $7.50 to $11. When the last phase we did at Timberline, our wearing cost was $6.50, and now we're paying $8. So your 1.75 multiplier on what you're requiring, whether it's bond or cash, is well enough money being provided back to the city if we weren't able to perform. And again, the only reason this is there is if we don't perform. If we do our job, there's no reason for you to have to call the CD that you have at the bank or the bonding company to do anything. That's just as us as a developer isn't able to perform our duty at the end of the day when that subdivision is finished and built out.
Kevin, when were these figures pulled?
Which figures you talking
The ones, the other cities' information?
about?
Oh, y'all did that?
Like last week,
Yeah.
yeah, recent.
Okay.
Just pulled recently. To answer your question too, when you go in to get a bond, you know, the bond paperwork, say we use your form that we're doing and we give that to the bonding company, whatever the cost of that bond is, let's say it's $500,000. So the developer pays a percentage of that annually or annually or every 2 years, depending on how the bond is. So let's say that we go and we get a 2-year bond. Then they pay their pro rata share of 2 years, and if it's not paid by then, and that bond needs extended another 2 years, they pay for another 2 years. If it's not paid for, and it's not released by the city, the bonding agent could reach out to them or to you and say, what do you want to do with this? There's options, you know, there's options in those, but they can be extended. I think we've got some probably that's been extended 6 years, probably 2 years at a time until a development finished. So did that answer your question? I think that's what you were asking.
Yeah, yes, I just wondered, I didn't know how it works. Did it, did you have to have an increase in, as he was explaining, I guess, that the purpose of, I guess, when we did this, when Chris suggested that back then was to make up for the time that, of inflation for a period of time, if the developer take longer than what's expected. Now, one other question I would have, I know at times a lot of money, as you all have share with us. But what if a developer, I know your business is timely, you want to keep things moving, but if you would invest in this piece, like you're talking about here, in another plat somewhere else, and you're doing that, now that thins your money out a lot quicker now, because if you were doing the cash, that's thins the cash out, because, you know, I don't know, maybe it's, I'm not suggesting this because I'm not a builder, so I don't know. But what I'm saying is, if a builder was doing a lot of different projects like that, now they're tying up their money. Say in the city of Calera where you're having to pay cash, you're tying up your money a lot before you finish your product that could be sold to regain that money. Is that true?
Yes, sir. So,
Exactly the kind of the reason that I've been here and talking about this is by the time I get through selling my first lots, I mean, I can put 100 lots on the ground. There's 119 going to be at Timberline Phase 6 when it's final platted and approved and everything. We don't sell 119 lots day one.
Right.
We sell 30 lots and then we wait 4 or 5 months before we sell the next lot. Well, I have all my cost and everything built in those first 30 lots that are divided. I've got a sell price, I got a lot cost that I owe banks to. The margin that I'm getting is very thin. That thinness is what I have to worry about paying and coming out of pocket for these bonds in cash situation, which means I'm really not recouping the amount of money that I'm having to pay in these cash bonds until I'm more than halfway sold all my lots. And that could be 9 to 12 months, depending on what a takedown schedule is to get rid of 119 lots within this particular phase. So I've already paid all the money to put in these streets, followed the protocols, have been approved by the engineers, been approved by the city that said we did it properly through inspections and everything. And now I'm having to turn around and go pay for something I've already paid for again at a much greater value, when that should be the money that we have for profit to continue moving on down the road into our next phase. I mean, on the sheet up there, phase 7 is already in the works at Timberline. So I'm trying to move Timberline along, but my cash flow is being handicapped by having to do cash bonds when a bonding company was insured and everything. And as you can see, most of the other municipalities around us are allowing those to be in place. So this is strictly a situation of cash and being able to operate my business. And by being what amount of work that we have been doing in Calera and continue to do in Calera, we're being handicapped and penalized.
I have a quick question, and it may be more geared for my city attorney. So there's an ability to extend bonds, as stated. You can extend it up to 2 years, 3 years, and I'm just imagining that what happened back during the crisis and the crash was people literally walked away from building. So if we were to do this, what's our recourse at the end of that time, and now it's time to extend, and the developer decides, well, I'm just not going to re-up that, and what is our recourse to call that in full? And if we call that in full, do we stop all construction and do a final seal coat on that property? Because obviously during construction, the 18-wheelers is what tears the roads up, and that's why that you have the whole reason for this is because the road gets damaged through construction. It's going to happen. It's just part of it. But what is our recourse to hold them to the fire for the extension? And if they fail to extend and we call the bond due, what is our steps to stop construction so that we can do a final seal coat in that subdivision at that point?
Well,
I know that's a lot,
well,
but I'm asking, I don't know.
I mean, in my opinion, having a bond is least advantageous to the city overall, because you gotta work with the bond company to get the money, okay? So y'all set up the system that's most advantageous to the city, because you basically got cash, you got a cash surety. I know they've pointed out issues from their perspective, from the development perspective of doing cash. So you'd have to go to the bond company and you'd have to ask for payment. And then you'd have to make a decision at that time, like whether you cover it, you do the work, and then you get paid on the back end or not. Is the bond company going to pay you easily? You know, you may have to get in litigation with the bond company. Now, I see here on Shelby, they've got Shelby County as bonds. I asked a colleague of mine at work, he tells me Shelby County doesn't do bonds anymore, so I'm not sure. I'm not sure about that, I haven't looked at it independently, but that's just what he said, because of these issues getting payment from the bond company. Now, the middle ground is probably a letter of credit, which is an agreement between the city, the developer, and the bank, where the bank agrees to, they'll make an unconditional payment to the city as the beneficiary of that agreement, and they go back to the developer to get paid. So,
What happens if the developer is bankrupt?
well, that's, the bank enters that agreement. They're gonna look at the developer and see if they agree to make the agreement to issue the letter of credit, okay? So basically, the bank agrees to make an unconditional payment to the city, and then they're on the hook to get it from the developer, okay? So it just is a balance as to what, as to what the commission, wants to do here to meet the needs of the developers who are putting a lot of money into your city, and how much risk the city wants to take for, developers not doing certain things that they've agreed to do, on the project. And that's the balance that you always try.
Can I respond?
The turn lane that we're waiting on at Timberline 6, we just got through placing a bond through Shelby County, so they are doing bonds. The other thing on the rebuttal, the letter of credit and the bonds operate the same way. I sign an agreement with a bank, or I sign an agreement with a bond company. If the bank has it, you call it to the bank is going to ask you how much work is going to have to be performed out of that amount that they have the letter of credit on. You're going to have to provide them with that. You're also going to have to go do the work, and then they're going to give you the money. The same exact way with the bonding company. It becomes both parties' responsibility to pay you when you request it upon providing them with the exact amount of information that they need, and then their responsibility to answer your question. If I'm out of business, it's their job then, both parties, to come and collect the amount of money that they had to pay out. Both cases, you are covered by either a bank or an insurance bond company.
Well, I hear what he's saying. I can just convey to you the experience of Bill Justice, who's been in this area for decades, and I discussed this issue with him before I came, and he said to me, it's sometimes difficult to get those bond companies to pay. And so I think the balance y'all struck whenever this amendment was made is we're not going to deal with that anymore, we're going to cash. Now, of course, y'all can take into account their concerns, which are legitimate concerns from the developer's point of view, and decide where you want to strike that balance.
Yeah, kind of to go back down where these came from. Pretty much everywhere that we got these from, we talked to the engineering departments on these, are the ones who work with the bonds. Pelham stuff's easily online. Leeds city engineers handled that. Fort Dale city engineer, Columbiana city engineer, Chelsea city engineer, Alabaster's city engineer. So all those, all these came from the engineering departments who are calculating these. And I've heard that Shelby County wants to go away from the bonds, but we do a significant amount of road work and stuff. Y'all seen it. You guys know that. We bonded not only this one, but we bonded the two that were at Cosler with the county. And then I've got one on Highway 11 that's being bonded currently as we speak. And the one that we had on 22 for the original interest for this was like a $500,000 bond for it. So we totally understand why you guys are wanting to look at this, but from the aspect of protecting you guys and us, we're asking you to look at something else as well, so that we can try to keep our working capital working, if that makes sense.
So,
Grace, from what I hear, talking about the bonds, looking and seeing the difference in bonds, what I just heard James say was accessing county roads, accessing the county maintained road right of way. Not, in our situation, we're talking about interior roads within the subdivision.
Yeah. they told
So
us.
the county may have a different point of view on that. Bill Justice worked with us in the past and led to this suggestion that we do cash. And this is in our subdivision regs.
Yeah, and I mean, I think he still feels the same about it, because I discussed it with him before I came here to meet with y'all tonight. But having said that, y'all are certainly empowered and entitled to do something different. You can do an amendment to the subdivision regulations after a public hearing. That's certainly within your power and authority to do that, once you consider the concerns raised by one of your major developers here.
So, just thinking out loud, what would be the possibility of a segmented bond? Your biggest concern is you develop the whole sector and you don't sell it but in 30 section lots. What's the option of only bonding the areas of concern first and then allowing them to increase that bond as we go? In other words, you know that the first sector is going to come up, so we're only going to require you to put a surety bond financial money up for that section, and then we, step by step as you go, increase that amount. Based on an original 1.7 million, I think you had stated earlier, I'm not looking at numbers, so I don't know, but what percentage of 30 houses is that, and take that portion of one, still keep it at 175%, but do it in segmented areas. That still keeps us in full, and it still holds them responsible before they get future development into it to ensure the next sector. That's just a thought.
Yeah, we already do some of that at Coslin. We did it in 50 lot segments instead of 150 lots. At Timberline, part of the reason is the way it is, the second entrance, that when the plan was approved, we had to have a back entrance out to provide Timberline with everything. So, we try to limit ourselves in those situations, but we have 119 lots tying into 2 of the phases already in Timberline in order to access the second exit. So there's not a question, and all roads and all pavement are already in. And I know this is, we talked about it a month ago. I appreciate y'all asking us to come back and talk. The other question that I was going to ask, because I know we have to post the bonds before the next meeting for Coslin and Timberline, is there any way that if you decide not to go the bond route and it remains cash, that on the CDs we could be named on those CDs in coherent with the city of Calera as like an additionally insured or a benefactor? Because the way those are written right now, and the way the CDs are in, they're 100% in nothing but the city of Calera's name. They don't reference us as a developer or anything. We still can't go get the money, but if we could be named as an additional benefactor, just so that we know that it's tied strictly to Timberline Phase 6 or Coslin Phase 3 in those situations. So
Your regulations say that the certificate deposit has to be payable solely to the city of Calera. Now, again, y'all are certainly within your authority to change that, but right now that is what you've decided, or what previous commissions have decided, so that
So
should
we
go.
could change that tonight without a public hearing.
Go to public hearing, yeah.
And it would have to go through the council also.
So what would be a pro and a con? Just if we were, with adding you as an additional insured on that bond, does that limit us to be able to call that bond?
no,
Not bond, I'm saying bond.
cash bond.
Yeah,
It still is in your name. It's kind of like an insurance policy that when you're doing things, you have to list, going to a subcontractor, maybe list a bank as an additional insured because they're insuring your property or something, or they have the mortgage on there. The one thing that it allows me to do is possibly use my cash in order to obtain a short-term loan by me being recognized as an owner on that cash CD bond, to where I can have access to some cash to continue on, maybe not at the same rate of the full cash bond, but that is an alternative that we have discussed. Much prefer the bond situation or the letter of credit over having to put cash out there.
Would that give you the ability to lien those CDs?
It would.
So that'd be the problem though.
No, it wouldn't, because the CD's still out there to you.
Yeah, but if we called it due, then we would have to fight that lien to get that lien paid. Right? So it would only be a problem if it's called due, but that's the whole reason for this anyways, is if something's called due or somebody fails to perform. So if we had a lien against a CD and we went to call all the CDs in, and there was a lien against it, then we would have to clear that lien to pull those CDs. And I'm not a banker, so I have no idea.
That wasn't really the way the bank explained it, but because you could still have your cash, and then it goes back in the same responsibility of just like a letter of credit or the bonding company, it's their responsibility to, because we'd just be an additional benefactor, they would then have to collect the money.
So if we pulled all, if we called the CDs due and we pulled the CDs away,
They're gonna pay and they're gonna collect from me.
Unless there's a lien.
unless there's a lien.
The lien would be.
And I don't know how that works in the banking industry. I guess those are things that we need to really confirm is there another option on the CDs to where their name is tied to it? But I would imagine,
It is purchased in our name, and each individual CD, like for his subdivision, his phase, there's two. There's one for sidewalks, and there's one for street, and it will have Timberline Phase 6 roads. And then the next will be Timberline Phase 6 sidewalk. So their project is assigned to it, but it's in our name. Does that make sense?
it does.
They're drawing interest on that money.
We are.
We're drawing interest on that money. We get the full interest back when we're good, so that's part of the reason why also, you know, we feel like if that's the case, we gotta go, that we should somewhat be on there to be tied into that, guaranteed that we're gonna get that CD, or get that interest that's being earned. So, I know this isn't, I appreciate y'all hearing us out and everything, and I really appreciate y'all taking a look at it, because it does have a long-term effect on doing business, and operating with the constraints that this puts on a business and everything. And, you know, part of the list was just to show that a lot of the other surrounding communities, some larger, some smaller, some counties, they're all in the same line as with the bonds. And one thing we've seen, a lot of the people have gone away from not allowing us to do letter of credits, and they're pushing us to do bonds. So I know that's a little different than what she said, but several of the municipalities no longer want us to offer letter of credits. Letter of credit only gives you 30 days notice of when they're gonna not renew it with me. The bonding company has a lot more, in my opinion, and you're right, it's my opinion, but I have talked to the bond underwriters and I have talked to the banks, so I'm not just coming with a lot of just smoke and mirrors from my perspective. I've tried to do my research to provide you guys the best of my ability with what our concerns are and how we'd like to see if something could be done. So,
I just want to clarify one thing. The amendments, your own rules allow you to make an amendment. You all may make an amendment to the subdivision regulations after a public hearing. So you have the authority to do that. But you have to have a public hearing on anything he's asking to change.
Could that be a special meeting? Yeah, it could be.
So take the appropriate notice.
Just personally, I mean, knowing and watching the history of Calera, I've born and raised here, lived here all my life. I think I like the second idea of being able to tie you to the CDs as long as there's no recourse or change if we actually pull that money. To me, that's a good steward of the city and the people that buy the homes in the area. The problem with the bond is and this is what I would have to be educated on for me to have a good sense of ability to vote on it, is if they call that bond due, or if it's extended and they refuse to extend it, what is the recourse we have if they don't extend it? Do we call it due? And if we do we shut down all development in that subdivision to do a final coat? Or to make an end to it right then because it's a finalized statement at that point? What is the recourse?
So you're saying the work stops from the developer? Is that what you're saying?
I'm saying that they failed to extend or do the 2-year extension because it's going to cost money. They're not going to just extend it for free. It's going to cost them another surety payment, I'm assuming. If that happens and they say, well, we just don't have it and we've pre-sold these lots to another builder because we're just a developer, and then we're sitting here in a position where it's not going to get extended because...
So the developer has a bond payable to Calera, and they don't finish the work, it needs to be extended, and the developer says, I don't have the money to extend.
Correct.
Well, I would think you'd want something in your regulations that address that specific thing, and we can look around and see how other cities deal with that. If all these cities are doing bonds, they probably dealt with the same thing. So I can do some research for you.
Yeah, it need a clause in the bond that states if it's not extended, it's paid in full.
Yeah,
Because if it's not extended, we're not at a
you
point
could
of
do something like
completion.
that, or he may have some experience on dealing with that.
So, to answer your question, like I said, I talked to the actual bond underwriter. So, if we decide we're not paying it, they notify you that the developer, us, are not renewing that bond. That gives you notification right then that you can make the call on that bond. But they're not going to give you the full bond amount. If I got a $600,000 bond at Timberline, they're going to go and want you to look at your sidewalks, look at your curbs, look at your paving and all of that, and come up with the amount of work that needs to be performed. You provide that information to them and say it's only $200,000, that's the amount that they're going to give you to cover the cost to do the work. And then they'll come to us, ever what means that might be, to collect their amount of money that they paid out to the city.
And that's the difference, like who's gonna have the burden to do all that? Right now, y'all are getting cash, okay, essentially cash.
But you still have to go do that work, because if I don't perform, you still have to go out before you can go to Central State Bank. You're gonna have to tell them the exact amount of work, provide them all of that information, and you're gonna have to go do the work before Central State Bank is just gonna give you money. They're not gonna give you a check for you to go do some work and not have it already performed.
Yeah, but.
And I appreciate your honesty completely, because that was a very honest statement that you just made in reality. But I think even moving forward, we need some information on what it's like and what are the steps if that takes place. What percentage of that bond do they actually pay out? And is there a way that we can maybe put stipulations in that protect us with that? In other words, we can ask for specific regulations inside that bond if that's what we decide to do. And I'm not saying that is, I'm just saying before I can make a decision on it, I would need to make sure that we're good stewards of the people that are buying the homes, that they don't get stuck in, like they did in Waterford, with a road that's
I've been
POS.
involved in a couple of bonds being called through the years, being city engineers in places. So there's a couple different ways that happens too. Some of the cities that we worked with did the work and then went after the bond, which hindsight probably wasn't the correct way to do it. If you notify the bonding company, in a lot of cases, they're going to go hire and have it done. And then they're responsible for getting it back out of the developer or whoever it is. It's all going to depend on how, what's done moving up to it. So if you put the onus back on them, he didn't perform, go do the work. We're calling this bond, go do the work, or we're going to do it. 99% of the time, it's cheaper for them to go find somebody to do it than it is you. Just because you're a municipality, people tend to charge more than they do private developers or anybody else. That's just how that goes in the construction world, because you got bonds and all this other stuff that's got to go with it. But I've seen that happen both ways. And exactly like he said, when it happened, they're like, show us the work we need to do. We're not just going to hand you a check for all this because it had safety factors on it. That's why they don't hand it out. But it's kind of the same way with a letter of credit or a cash bond. When a cash bond's on it, they don't just hand you the whole check.
Well, even to that point, though, another concern is, at that point, we get to that, and there's still 30% construction left. Do we freeze that construction? Do we have the authority to freeze that construction? Because once we put that final seal coat on, construction trucks keep coming. It doesn't miraculously become much stronger than the first seal coat they put on. Just like you said, it's the same thing. You know, who's gonna fix it at the very end when everything's said and done at the end of the day and the city is now taking over those roads? I think those are the things that were my concern. I can't speak for everybody here. Those are just what I would need to understand to make a decision on that.
Well, once the roads are dedicated and accepted by the city, it's the city's responsibility to maintain them.
Correct.
Yeah.
After it's completed.
Yeah,
But if we're 60% into this and they don't renew the bond and we've got a road that's divoted and creased and they're not wanting to do any repairs to it till they get the final seal coat because we're still under construction, which is what they say every time. And I get that. I do the same way. I just want to make sure that if that happens, we have recourse to stop construction, do a final seal coat and call it a day. And then somebody's got to come in and pay another bond to continue the construction.
Well, I think if this is contemplated after the final plat has been approved, that's when you're asking for this, and you did enter into that improvement agreement, maintenance agreement, which is at the end of your subdivision regulations. So you've already got a final plat approval, and they've agreed to continue to do the seal coat or some of these other things. Maybe they haven't finished the gutter curb or any of these things on your list, sidewalks, et cetera. But I think what I can do for the commission is provide some more information maybe on how it actually works in the real world and get some examples for you. Maybe we can contact some of these other cities that do bonds and ask them about their experience with it. And I'm happy to do that if you guys want me to take that step.
And I'll say this, my comments are not necessarily towards the good stewards of the city of Calera that's done great developments, Mr. Clayton. But we have other areas that are trying to get subdivisions going. And it's setting the precedence for everybody. And unfortunately, we have to govern based on the few bad, and it sometimes hinders the good. I just want to make sure that we're good stewards of the community so that when they buy a house, they're not left with a road that beats their car up every time they go home because we can't complete a road and we can't complete a subdivision.
Yeah, I mean, what you're gonna do is gonna apply to everybody. It'll
Right.
apply to the folks who are doing well for the city and apply to everybody else. And presumably y'all made this change because y'all had some bad experience in the past where the city has decided we're not taking any risks, we're holding the money. And when you hold the money, you got the power. Do it any other way, letting some third party hold the money. And that's fine. Other cities and other entities have decided to do it that way, and that's perfectly your prerogative. But you guys will have to balance that risk on behalf of your municipality.
I have a question, and this is probably a dumb question, but, it's going to be either one or the other, but there's never a combination of both of them together.
Well, I think here he's found it is one or the other. Yeah, it's
Yeah.
one or the other.
So there's never a cash surety and a bond.
You could probably do a cash surety for something, I don't know why you couldn't, I don't know any authority that prevents you, a cash surety for some things, a
Like-
bond for the others.
Like a
Is that
cash
what you're
surety for
saying?
the seal coat and a bond for the other.
Yeah, I don't know authority that would prevent you from doing that.
Sidewalks are easier than roads.
Let me, on the seal coat, I know I keep bringing things up, but Cosm Phase 1, we have completed our final seal coat on that job. The cash bond that we have, y'all, is $183,000. Y'all came out and inspected it, marked everything up, and told us what we had to do. We've already paved it, and it cost us $70,000. And so the other question is, how long after we put a final seal coat down, it's been reviewed, and do we get our CD back? Do you have a policy about how quick y'all are supposed to respond to that? Because it's been 2 weeks.
Some language to the seal coat that requires it to withstand 1 year. So I don't know if we're tied to that 1 year.
I don't think we owe
No.
it a year.
No. We're supposed, that's for us to put the seal coat down.
And in the case that you're talking about, you did a lot of work real quick. You sold.
Yeah, we sold 50 lots. It's been in place for 2.5 years, and we finished.
That's contradicting to what originally got us in this position back when the economy turned down with building in place. You know, we went for a long period of time, and what numbers that it took to seal that street and complete that street back then, the lapse in time and the cost in oil and whatever drives the market for asphalt and construction, there's a big gap in difference in price.
Yeah, I'm not arguing your 1.75, but my point is you had a 1.75 multiplier on all that, you know, and it cost me 70,000. There's still another 13,000 of inflation for that one seal coat that's being built in. I don't mind putting the bond up, but I'm just saying, you know, the other question is in the regulations. And once we do it, the engineers have inspected it, how quick can we expect to get the CD released back to us?
I'll circle back on that particular issue. I've not been told that
We paid it 2 weeks ago, so.
2 weeks ago, so.
Yeah, so the other part of that is we put the seal coat, we paved the roads a long time ago. We've sat here and we've paid the cash bond, and then we've already had to pay the bill for the seal coat, and we've still got $183,000 sitting out there in cash. So, you know, like I said, I appreciate it. Thanks for hearing us. If we can come back, answer any other questions, provide any other information, I mean, I'd be glad to bring the bond guy in and have him explain from an insurance company, but y'all have insurance. You ought to be able to talk to somebody that's writes bonds that y'all deal with and find out the exact process that they go through to provide y'all information to make you feel more comfortable. But thank you for having us.
Have you brought these streets that's already got the seal coat for the city to take over the streets?
Yes, sir.
You've presented it to the city?
Yes, sir. It was all done.
Any more discussion?
I just have one more question with James, and maybe on those municipalities that you named here in Shelby County, on the list that you have, are there any others that doing over the 100%, like we are saying we're doing 175, but they're doing over 100%?
There is, let's see, 150, 150, 150, 150, 150, 120, 150, 125. There's one that was 200. I think that was Pelham's maybe.
Pelham.
Yeah, Pelham was 200%, but everybody else is between 125 and
They were
150.
just on seal coat.
Could we make a copy of that? Would you mind?
Y'all should have
You got one
it.
in your packet.
Okay.
Thank you.
Was it on the email?
Mm-hmm.
Any more discussion?
Copy of mine, I've just written them.
We got about 3 minutes till the regular session starts. So, anybody want to take a?
I don't see it, Dan.
He said he didn't see this.
Did you find it?
Never mind, we're on meeting. I got it. John?
Yeah, let me get there. That's across the street, basically from where our office is, on 10th Street, right before you get to the elementary school, once you cross the railroad tracks. Just, he's gonna put a little office in there. Nothing major, really, there won't be any traffic from what I understand. There won't be a whole lot of traffic, it's just the person working there.
There's a house there now,
Yes,
so they'll level the house?
No, he's remodeling.
remodeling the house.
Is there someone living in the house next to it, by the
Yeah.
tracks?
But these were both commercial.
Yes.
They were both business.
And they were B2 at one time, then they were rezoned to residential. And now this one is being asked to go back to B2. So they were B2 at one time.
And the neighbor, they're
Yeah.
there, I don't know
The
if they're.
property next to it is ours, and there is a tenant in there.
Can you come up to the mic and
Yeah.
speak, where they can hear you?
Yeah, I just wanted to let you know that the house next to the house that's there is ours, and there's currently a tenant in there for maybe about 3 to 4 years. Yeah, around 3 or 4 years.
The house in front?
No,
No,
the
that's
house
Beside.
The house beside it.
Basically, right there.
Yeah.
Yeah, the one on the corner.
Are you currently the owner of the property,
My father-in-law is,
your father-in-law?
yeah,
Are y'all here in opposition or for?
opposition, because the house has been remodeled when we acquired it, so it was remodeled for, just to have a tenant living there, and I think the property is just like too small to be business.
So,
He will have to put a buffer in between him and that house.
he will.
Yes,
What type of buffer?
trees.
How do they access that back there now,
Access.
that rear house?
That's on the
No, it's on
same
10th
street.
Street.
That's on the same thing, okay, all right, I understand.
Their house is basically across the street from the police department investigations. The house they're wanting to rezone is across from active air.
Okay, all right, I understand.
My magnifier's not working, or I would magnify it for you.
Does, all properties have to change, or it's just like one?
No, yours is staying.
This is one.
Just one? Will that affect the other property, just to keep it as a residential?
Yeah, your property won't be affected.
And that's what he was saying, they will actually put up a natural buffer between your residential property and the commercial property. So there'll actually be a tree buffer. So,
Yeah, because we thought it was gonna be like a rezoning for both properties. If it doesn't affect us, I don't think maybe they probably won't be against it, but I'll have to check with him.
no worries.
How big is the lot?
Let me see.
Is it 1 point, like,
Let them know also that we typically would never
Point to-
rezone their property without their permission. They have to request it, we don't just go and do it at random. He has to request us to make that change for him.
And they requested us to make the residential change
Yeah.
from,
Yeah.
And I think it wasn't approved at that time. Somehow later got changed. I cannot remember exactly how.
how long have you lived there?
We had it like for about 5 years, and then,
4 years.
yeah, it was remodeled, and then the tenant moved in, like maybe a year after. Then we got-
This zoning would not affect his zoning whatsoever.
Okay. Yeah, we were thinking the change was gonna be for both properties. Thanks, man. That's all.
Thank you.
Thank you. All right. Let's call the meeting to order and to have a motion to approve the minutes from the last meeting.
So moved.
One move, do we have a second?
Second.
And a motion and a second, all in favor?
Aye.
Opposed? One abstention. Tom. All right. Does the planning commission have any reports that they would like to give? All right, I don't have anything, and we don't have anything on the old business. The new business is maybe about the rezoning of Lauren's lot there. Is there any discussion on this? Do I have a motion?
Yes, I like this, one thing I'm concerned about, especially when we start moving with B2, I know his express is just for an office building, but opening that up to a B2, what else, what if it's not an office building, what if someone else purchasing, they don't want to use the office building, what else can they put there, what would be,
Anything that's in the
Anything
B2
in
zone.
B2, yeah.
that would fit, they could have the acreage for that.
Yeah.
So-
It's restricted by the size
That's only
of the
per
lot.
acre.
And they would still have to meet, you know, whatever building size, setbacks and all that stuff.
Yeah, the office building would be perfect, I have no problem with that, because like, if there's enough land, you can have somebody with a truck and just put it
No
in.
size requirement on B2 on the size of the property.
I'm sorry, say it again now.
There's not a size required, minimum area on B2 for the size of the property. They would just have to meet the setbacks, be able to meet the setbacks that's in there.
How long was it B2 prior to them rezoning it to residential?
It was all B2 for 11 years.
That's what I was
That's
thinking.
what I was
It did when they changed everything in
Yeah, I think when our office in Activary got put B2.
That's what I was thinking.
Yes, I remember both these properties would be two for one time, and I think the Kings had it, they owned it, and it was B2, I think when they had it, wasn't it?
Yeah, they rezoned it, the Kings owned it when it was rezoned to, back to residential.
It's not a lot of distance between those two houses, correct?
Not much, I could tell you.
Isn't that much?
Yeah, probably at least 50 feet.
About 70 feet,
7 feet between.
from house to house.
And that put, it'll be a natural buffer put
There's
there.
a
and-
natural buffer in between, there will
We'll
be.
have to put one.
Yes.
I guess all I'm concerned I have is just if somebody just bought the property, it's still a B2, and they come and want to put something that will be a little bit more noisier,
Yeah.
rather than against these other residents, would be a concern to me.
You're saying the current plan is not to level the house, it's to leave the house and remodel the house.
They remodeled.
They've already
the house.
remodeled.
They've
Okay,
already remodeled the house.
okay,
They've
gotcha.
kind of gone about this backwards.
Okay.
Yeah.
Can they add on to it?
No, they just done their parking lot and all that.
Yeah, this should have been the first step in the process, but they kind of went ahead.
Yeah, how did they get the
How
permit?
did it get?
Residential before, so residential nationwide.
So there's no recourse for that? I guess if we make the decision tonight, it's kind of like.
Yeah, pretty much.
I mean, technically, it would stay residential or just have a home office in it anyway, home occupation.
It can't be a home office without you living in
Yeah,
it.
you gotta live
I've
in it.
said, but if someone lived in
Yeah,
it,
if they
like
lived in
next
it,
door, they could do
yeah.
a home
And
occupation.
then they could only have, what, is it 25%?
25%
25%
of the house.
Can y'all say what it is, or no? Do we know what it is, the business is?
I think they do something with shirts.
It's an online business.
Yeah.
Yeah, they purchased the business from another person who's had it since the 80s, and they do drop shipping, so there's no retail frontage, there won't be any in and out retail. They just have a small limited supply of inventory, and they drop ship. So they run everything off a computer, they're just sitting there on a computer, day in and day out, so. It's a very simple business concept, so.
So there's not gonna be any drop-off there or anything like that?
It's just, they're shipping from a warehouse to the direct customer, end consumer.
Any more discussion on that?
Why does this buffer have to be not found?
It's on page 56.
It's in the landscape.
And it states that the maximum yard setbacks in the front is 35 foot, rear is 15 foot. 0 on the side, rear and/or side yard setback shall be increased to include a buffer if required. Then it says down below that it needs a natural buffer.
Well, that's kind of what I was getting at, is the way it looks like it's situated. If it changed the zoning, they could build right up to the lot line, and
Currently though, right? I mean, that's currently. This is where they've done everything they're gonna do, there's no addition.
There will be no, yeah, there's no addition.
But that's with this business, if it was sold, it could be something else. So it could potentially be built on that line.
Well, then have to pull a permit
Yeah,
and then have to.
and the buffer would still have to exist. Even though there's 0 setback, they still have to have a buffer.
In the comprehensive plan, how do we have that area? We have to have that with you, Kevin.
I don't have it with me, but I believe in the comp plan it was still residential.
Yeah.
I can double check.
Yeah, check it out.
I don't have internet, so this might be an issue.
All right, any more discussion? All right, do I have a motion of any kind?
They want to know the comp plan.
Yes.
I make the motion that we approve this rezoning from the R1 to B2.
We have a motion made, do I have a
I'll
second?
second.
And 1 second. All in favor?
Aye.
Opposed?
I was just trying to hear what he had.
Yeah, I don't have
Well,
internet.
that's what I was trying to pull it up.
Yeah.
I'm pretty close.
But I want to say the comp plan had it residential, but it was, the only residential was those 2 lots and that trailer park behind it. I wish I could pull it up with that. Yeah, they were.
The orange. First and second, waiting on vote.
Well, I can say, yeah.
Yeah, I didn't think she agrees anything.
All right, I'm in agreement. I'm in agreement.
Okay. Where you got, we was only waiting. Everybody go.
Right? Motion to adjourn?
Do you want me to pull that at the bottom?
That's first, you'll have a second. First.
Second.
Second. Okay. Yeah, this is, I gave you one.